Welcome to Stock Talk with Nico Criticos. As you can see here, we have a new camera setup, so higher quality camera, but I'm still getting used to everything. So this is going to be the first video with this setup, and we're going to see how things go here today. So the stock we're talking about today is going to be Nike because I recently purchased 30 shares here at $58 a share. I do think this is going to be the bottom for the stock. The valuation is super cheap. I mean, come over here to Yahoo Finance. We have a forward PE of 36, which sounds like a lot. But then you look at the price to sales, it's a 1.8, which is, pretty close to an all-time low. The PEG ratio, very cheap, 2.4. And again, they're in a turnaround mode now. So the numbers are going to look kind of off, but basically, Elliott Hill, who's been the CEO now for about a year, is slowly transitioning the company back into like they're trying to get back into wholesale or back into retail stores instead of just direct to consumer, and they're trying to reconnect with their previous market. So I think they want to focus more so on sports than just leisure wear and stuff. So there's lots of stuff going on here. And then when you ask Gemini to do a stock analysis on this, it gives you lots of interesting things. So one thing I want to point out too is that I just sold Lululemon last week, and Lululemon is very similar to Nike in what they've been going through and stuff. But the weird thing is, between the sales for Asia versus sales for North America, Lululemon and Nike actually have them complete opposite. So Lululemon was, let's see, Lululemon was growing in China, but their sales are down in North America. Nike is the opposite. Nike has, as it says here, revenue in Greater China plummeted 17% in the most recent quarter, but their sales in North America were up. Now, tariffs is something that's hurting both Nike and Lululemon, so that's something to take into account as well. Nike warned the U.S. tariffs could cost the company upwards of $1.5 billion annually. And again, I think that's kind of like a temporary thing. Maybe it lasts for a year or maybe even 2 years. But I think definitely after Trump is out of office, I think those things are going to turn around. And possibly even before Trump leaves, things will turn around or get better or something will adapt to that situation. Um, but as you can see here, their sales were actually up. So keep that in mind too. Performance running, a critical category for Nike, has shown double-digit growth for two consecutive quarters. So Nike is already turning things around. It's not fast growth yet, but it's turning things around, signaling that Nike is successfully reclaiming market share from newer competitors. And they actually, if you look at the last couple of years, that's it's companies like those, their competitors is what has been taking a lot of market share from them. And that's been one of the biggest problems as well. After years of focusing too heavily on direct to consumer, I remember when that news came out that they were switching to D2C, it kind of sounded like a good idea. Because I mean it does, right? It's higher profit margins, you have more control over your the way the sale gets made direct to consumer, but obviously it hurt their sales because people are not buying their shoes as much. Nike is repairing relationships with wholesale partners like Foot Locker. I also saw that I think they have like a new deal with Amazon as well. So there's definitely a lot to look forward to. I just feel like even if let's say they can't take all that market share back or the growth doesn't get that high, I just feel like it's an incredibly low risk. I mean, you look at what the stock has done the last 5 years, and you look at the market cap of what? 86 billion dollars. Do you think Nike is going to go down to like a $20 billion company? No, I don't think that's realistic. They have one of the best brands and one of the most iconic logos and slogans pretty much of all time, right? So that's a very powerful thing there. Gross margins fell to 40%. The company is relying heavily on discounts and liquidations to clear out old inventory, which kills profitability. Again, that's part of the transition. It's short term. In a year from now, that should be over and the profitability should be much higher. Revenue in China plummeted 17%. Investors are increasingly worried that local Chinese brands are permanently eroding Nike's dominance. Okay, and I don't know, that's not good news. I personally, I think I'd be more concerned with North America than China. Then we have analyst price targets. We have all these different companies pretty much all telling you that it's a buy basically. Anywhere from $65 to $100 are the price targets. And right now it's at 58. So I might even buy more than this because again, I only have $1,700 worth. I kind of want to make this over a $2,000 position. I just think it's such a low risk investment right now that I might buy more. Nike is a show me stock while the brand remains globally iconic and the dividend is secure. 24 consecutive years of increasing. That's crazy. The recovery is proving to be a slow grind rather than a quick bounce. Investors are waiting for proof that revenue can stabilize in China and that new product lines can offset the cost of rising tariffs. The CEO, he actually said we're in the middle innings of the transition, which I thought was kind of jumping the gun a little bit. I mean, just a couple months ago, he did an interview where he said, like, it's going to take a long time. Like, don't expect anything to happen too soon. And I don't think they're not giving guidance, like they're not giving specific guidance either. So I thought it was kind of weird that he said that. But let's do this. Let's ask Gemini, what is Nike's moat? Because lately Gemini has been giving some really great um, analysis on this. So Nike is consistently, obviously they work with the NFL, NBA, stuff like that. That's a big deal. Nike is consistently ranked as the number one most valuable apparel brand in the world. Its moat isn't just the logo; it's the emotional resonance and pricing power that comes with it. And I guess some people might make the argument that those things have kind of died down in the last couple of years. But it's still, I mean, they've gone through problems and struggles before. This company has been around for a long time. So I just don't see this one going under or becoming totally irrelevant. Um, what else do we have here? Even during the turnaround phase, Nike maintains a skimming pricing strategy. Consumers are historically willing to pay a premium for swoosh branded product over a generic or low tier competitor, which protects their gross margin during normal economic cycles. Then we have the massive demand creation budget, which exceeded $5 billion dollars through its partnerships like with legends like LeBron, Ronaldo, and the Jordan brand. Nike has become synonymous with elite performance, right? That's hard to top or compete with. For a new competitor to match Nike's roster of 650 sponsorships and 140 league associations, they would need decades of time and tens of billions of dollars, which again makes it almost impossible to, totally beat out Nike. Nike protects its lead through a massive portfolio of patents and state-of-the-art R&D. This facility houses the world's largest motion capture installation, hundreds of prototyping machines. They hold over 500 patents, and they launched new platforms like AeroFit and Project Amplify, the world's first powered footwear system for running. So there's a lot. There's just they have a lot going for them. With roughly $48 billion in annual revenue, Nike has immense bargaining power with suppliers in Vietnam and Indonesia. And even after a botched pivot to D2C, Nike's ability to pivot back to wholesale, re-entering Amazon, expanding Foot Locker, and I think they're in Dick's and other ones, shows a distribution muscle that smaller brands simply don't have. So, again, that is why I am bullish on this. If we look at the last couple of quarters, revenue has just been basically flat. It's not good. And then net income has been bad because it bottomed Q2 2025. But like I said, past. This is now the second quarter in a row where there is growth, and let's hope it keeps going up and up until we get back to like a $2 billion bottom line. That would be really nice. And that's pretty much it. That's pretty much it. I just think at this point, as soon as it dropped the other day, when it went from $67 down to 58, I said, okay, this is a buy now. So that is my analysis for Nike. Let me know what you guys think down below, and I will see you in the next video.